American banking system crisis is growing larger by the day. In the latest development, a second American bank, Signature Bank, has collapsed after the Silicon Valley Bank. The US regulators are in a panic mode and the tremors of the same are likely to be felt in India. But this financial meltdown seems to be growing now as First Republic Bank has fallen 60% in pre-market trading, and this is amid the concerns over the financial strength of the California bank. A huge meltdown in the American banking sector, and we are being joined by experts. Ajay Bagga, market expert, is joining us live on this broadcast. Mr. Ajay Bagga, if you can tell our viewers about a little more about the financial meltdown in American banking sector and how it could impact Indian markets as well.
See, the impact on the Indian markets is visible today. We are down anything from 1.5% to 2%, depending on the index that you look at. But Indian banking remains, in a safe harbor. Our banks depend on domestic depositors and they lend to domestic customers. So it is a very domestic economy, and there is no fear of contagion coming from American banks or European banks into India. The subsidiary of SVB that used to operate in India was sold off in 2015. So we have no linkages directly to the unfolding crisis in the US. What is happening in the US? Over the last 1 year, the Central Bank of US, the Federal Reserve, has hiked its interest rates by about 4.5% from 0%. Now, that steeper rate hike has not happened in 40 years. What that means is banks which were holding government bonds or mortgage bonds at, say, 1.5% pricing saw these being re-rated to 4.5%. In the case of mortgage bonds, even going up to 6%. Now, when the interest rates on bonds go up, the prices of the bonds go down. So the banks are sitting on unrealized losses because these bonds that they were holding in their portfolios have gone down in value. The estimate of this unrealized loss is about $620 billion. Now, most of the major banks have enough capital and enough cash flows to absorb something like this, and they don't need to absorb it. They can hold it till maturity, and then whatever is on maturity is what they get. But the smaller banks have started seeing customers getting worried on the safety of their deposits. Two banks, Signature and Silicon Valley Bank, they saw a big run on their deposits where customers all of a sudden came in with bunched up requests to withdraw money, which obviously the banks could not, handle. Silicon Valley Bank sold a huge chunk of $21 billion of bonds and made a loss of $1.8 billion. After that, it went into bankruptcy. The US government's insurer, FDIC, the Federal Deposit Insurance Corporation, they took over the bank and it went into receivership. A new administration has come in. The good news is last night, the US government moved very swiftly along with the regulators and it announced a deposit protection fund. So they said all depositors are safe and we are insuring all depositors of any amount in the US banking system. Second, to generate liquidity, they offered 1-year loans to all banks against their bond holdings, so they won't have to do distress sales. That lifted the mood in the morning in the markets. But as you mentioned, this First Republic Bank case of going down 60% because of, again, lack of liquidity, lack of adequate funds. And if customers come demanding deposits, they might not have the funds available readily to give. That is causing some jitters across the globe. And we saw European banks falling, we saw Asian markets going down, and Indian banks have also followed suit. We lost about 2% on Indian banks. But India is more a resonance that is happening. We don't have a direct connection or direct exposure to any of these banks in the US or in Europe.
Yes. Yes, Mr. Bagga. In fact, it is a cause of worry about what is happening, in fact. And if you can also tell our viewers about the impact that this could have on the startup ecosystem in India, because that is very talked about at this time, because Silicon Valley Bank was known as the bank for the startups, at least in America. So how would it impact here in India?
Yeah, it's a very good question. Actually, what used to happen, a lot of the VCs, when they would give money to Indian companies, they would say, we would like you to shift your corporation to Delaware in the US. And Silicon Valley Bank was the bank that would lend them bridge loans and also accept the money. So when you get, say, $10 million from a VC or a PE fund, and you're not going to use it immediately, you have to park it in the meantime. And Silicon Valley Bank was the port of call. So a lot of our startups who have taken money from American venture funds or private equity funds could have parked funds with SVB. We had one case where a company management came public, so we can take that name. Again, it's not a buy or sell, but Nazara Technologies, a listed Indian company, their subsidiaries have exposure of 64 crores to this Silicon Valley Bank in Santa Clara. So their US subsidiaries had parked about 64 crores, and they've been trying to get the money out. Hopefully in this week, they'll get the money out after the US government's guarantee. But it is going to impact not only in India, but in China, in Denmark, in UK. They had a big subsidiary, Silicon Valley Bank UK, which today got sold to HSBC for £1. £1. It's a 6 billion assets and 5.5 billion liability bank. So nearly a 12 billion balance sheet bank, making 88 million pounds profit last year in 2022. It got sold for £1 to HSBC today. To safeguard the startup ecosystem, to safeguard the technology companies which had put their surpluses with the bank. So this is happening. Actually, you're very right in what you said. It can have an impact on the startup ecosystem.
Yes, thank you very much, Mr. Bagga, for talking to Republic TV and in fact telling our viewers about the kind of impact that this banking meltdown in America will have.